Good afternoon. My name is Joe Carroll, Head of Professional Development at Chartered Accountants Ireland, and welcome to this information briefing on our new Diploma in Finance for Managers. During this session, we will hopefully give you a good sense of the programme and of the team behind it. I think it's fair to say that at times the language of finance can appear impenetrable, confusing and off-putting, and I suppose at times even scary. And for us from the outset, addressing this was a core objective. Our aim is to take the fear out of finance and to develop an effective level of both competence and confidence. Our aim is to enable those coming into the programme from a non-financial background to master the fundamentals of finance so that they can with confidence challenge, ask questions, and I suppose contribute to the debates that are ongoing within organisations and those key business decisions that are driven by financial considerations. I'm delighted to be joined this afternoon by a number of individuals, Course Director Brian Feighan and my colleagues Linda McGee and Sinéad Fox-Hamilton, who you will meet later on. We're going to start out by telling you a little bit about who the programme is for, talk to you a little bit about maybe some of the skills that you will learn, and what studying with us is like and how you'll be assessed. And then we'll get into some of the details around the key dates and what you need to do to enrol on the course as well. Of course, if you have any questions, delighted to take them as we progress or at the end. So who is this programme for? Well, the programme is for current and aspiring managers, business owners, and those who are in a senior role who need to have an understanding of finance but aren't actually from a financial background. So if you're someone who's come up through an organization, and you may have come up through a marketing discipline, engineering, or other key backgrounds, and need to know more about finance, not necessarily to become an accountant, but that you can understand the language of accountancy, understand the processes, understand the different elements of it, so that you can contribute, as I said, with confidence to that debate. If you need to feel that you need at times to unpick the language and to fully understand the different elements, then this course is really for you. Now, at this point, I think I'm going to ask our course director, Brian Feighan, to come in and tell you a little bit about the skills and maybe get under the hood a bit and tell you what exactly the course is about. Brian.
Many thanks, Joe. So what skills will you learn on the programme? Well, I guess to consistently make good decisions as a business leader, you need to understand the financial dimension of those decisions. Now, you don't need to be an expert, but you need to be able to question the experts and challenge them appropriately on finance and accounting matters. So be that your accountant, your external advisors, your financiers, and so on. And I think what really sets this program apart is that you won't just learn those fundamentals, but you'll also learn how to apply them to make smarter business decisions. And how we'll do that is we'll immerse you in the course in a series of practical hands-on scenarios and real-life case studies. And that's what's going to help us achieve the various learning objectives that we've set out for ourselves that you see on screen here. So what I'm going to do is give you a little test drive. Now, I've chosen the cockpit of a Formula One car as a metaphor for how business leaders benefit from financial insights. You know, as the driver of your business, you hopefully have the skills to safely navigate the course. But unless you can understand the information on the dashboard in front of you, you're not going to perform to the best of your ability. You know, it's very important that you can react to that information and interpret it appropriately, that you can challenge your team on the information that's being fed to you and use that to help you collectively make better decisions for your organization. And ultimately, of course, choose the right course of action. So what I'm going to do now is walk you through a couple of examples or scenarios to illustrate how we do this on the diploma and how you will learn those skills. So the first one I'm going to look at is cost benefit analysis and a cost benefit decision. Now we're all kind of familiar with this, right? We encounter this in our daily personal lives as well as our business lives. But I guess what the concept will hopefully illustrate to you is that there's a little bit more to this than meets the eye. Okay, cost is a very slippery concept in a decision-making scenario, and it's really important to get behind that. So here we have a consulting business, and you're running this division, if you will, in a large service organization. Your team's just updated you on the progress of a research assignment that you've taken on for a new customer. And unfortunately, the news is not good. You've agreed a price to win this assignment. You'll see it there, the revenue from the finished project in the box over here. And that is coming in at 300,000 euro. The problem is that you've already incurred cost to date of 260,000, and your estimates now say that it's going to cost you another 180,000 to complete the assignment. So not a pretty picture. Now you have the option to exit. Okay, you negotiated this at the outset. You have a penalty fee for dropping it now with the client. You won't earn any revenue. You'll actually have to pay the client 50,000 euro. So that doesn't look too good. However, the good news is that an intermediary has approached you, and they're willing to buy the unfinished research or your work in progress, your WIP, from you. Now, cleverly, you did negotiate in your contract with the client that you were not restricted from selling uncompleted product if you didn't proceed with the contract. So we'll assume it's not proprietary to or confidential to the client. And this intermediary is willing to pay you 200,000 euro now for this incompleted project. So clearly you have a decision to make, and in this case, it's obviously a mutually exclusive decision. You either complete, option one is to complete the project for the client, and option two is we drop the client, okay, and we go with the intermediary. So the challenge here is, how do we approach the decision, and what is the correct decision? So let's look at how we might analyze this in a cost benefit scenario. So in the first column that you can see here, what I've done is I've option one. Okay, this is what we call a full cost analysis, your typical kind of historical cost analysis that your accountant would do for you. So if you were reading about the performance of this completed project in an income statement or a profit and loss account, this is what it would look like. You'll get the 300,000 hopefully from the client, and you're not going to get anything to sale to the intermediary because that's not an option you're pursuing here. You're going to show all the costs you've incurred to date, the 260,000, which is a deduction, obviously, and a further deduction of the 180,000 it's going to take to complete the project. So your total costs are 440,000, the 260 plus the 180. You've earned 300,000. You're going to show a loss on this contract of 140,000. So that's what your P&L will tell you, okay? But that information is not very useful for helping you make the right decision here. To make the right decision in option one, we have to look at this on what we call a marginal cost basis. And let me explain to you what this means, okay? So in this scenario, yes, we're still going to earn 300,000 when we complete the project. We're not selling it to the intermediary, so no revenue there. Now, when we look at the 260,000 that we've already incurred, from a marginal costing point of view, that's called a sunk or a committed cost. It's going to be incurred regardless, okay? Nothing we can do now is going to change the fact that those costs are incurred, and they don't really have any bearing on our decision. So for decision-making purposes, we actually call that a zero. The cost of completion of 180,000, well, they are relevant. That is a relevant cost because it's still to be incurred. If we complete the project, it's going to happen. If we don't complete the project, it won't happen. So that's a relevant cost. What this now shows us is, given that we won't have any penalty fee to pay if we pursue this option to the client because they're going to get their research, is that the contribution, not the actual profit, okay, the kind of what we call the full cost of profit, but the contribution we will earn if we proceed on this basis will actually be positive for our business. Okay, we're going to get in the 300 grand, we're going to spend an extra 180, so we're going to make 120,000, and that will contribute towards, if you like, the 260 that we've already spent. Yes, in the P&L we'll still show a loss, but in the absence of any other option, this would look like the right thing to do to complete the project. But we know we do have another option. Okay, we've a simple kind of mutually exclusive situation here. We cannot complete the project. If we don't complete the project, we're going to get nothing from our client. But now we can sell the incomplete work in progress that we've already done for 200,000 to this intermediary. The costs incurred to date, again, are irrelevant to this decision. They're sunk. What about our cost to completion? We don't have to complete. We can sell it as is. So there's no incremental cost here, zero. There is another incremental cost, however, to this decision. If we choose option 2 and sell to the intermediary, we will have to pay the penalty fee to our customer, who will no doubt be disappointed, and that's going to cost us 50,000. But interestingly, what that suggests is that we will earn 150,000 contribution or incremental revenue from actually pursuing option 2. So that might be kind of surprising, because the traditional analysis here says we lose 140. The marginal analysis says we actually make 120,000 contribution, and that's correct. But financial criteria alone dictates that the right decision is actually to pursue option 2, all other things being equal. So we drop the client, pay them the drop dead fee, and sell to the intermediary. And interestingly, when you look at the difference between the 120,000 and the 150,000, what's happening is we make an extra 30,000 if we pursue option 2. Another way of considering that is what we call the opportunity cost, or the opportunity forgone of earning that profit. So if we go with delivery to the customer, we have to factor in that opportunity cost, which is losing the 30,000 we would have made if we'd sold to the third party. Now, that's not your final decision, okay? That's the financial criteria. Now you need to think about all of the other things that go with this. There are qualitative issues, there's reputational issues, there's customer issues. You're just a division in a large organization. Maybe this customer might have other relationships with your organization. But what's helpful is you've now identified the financials. You also have what it's going to cost you, okay? So you could actually, one option, for example, to introduce here now would be to go back to the customer and say, look, we're taking a bath on this. We quoted too low, hands up, and we have an option to sell to a third party. We don't want to do that. For an extra 30 grand, we'll be harmless on this, and we'll be happy to complete for you. So it just gives you the right information that you need to make a better decision. So I suppose the insights that you might learn from this cost benefit analysis are that when making decisions, costs are not always what you think they are. You need to look very carefully, and both the costs and the benefits require some thoughtful assessment. Sunk costs, committed costs, costs that are going to happen regardless, they are irrelevant for decision-making purposes. Yes, we record them in our financial statements, but for making a decision, particularly if you have kind of, a number of options to consider, you exclude your sunk costs. What's important are the incremental costs, and particularly the opportunity costs that arise in different scenarios. And decisions are not always binary, okay? So there may be other options, as we've just seen, other considerations to take into account. But fundamentally, if you don't know the right question to ask in the first place as a business leader, well, you're driving with a blindfold and you're not going to make the right decisions. Now let's look at another scenario, which is about capital allocation. So in this situation, you are the CEO of an engine manufacturer with 3 divisions: automotive, marine, and aviation. You could think of a company like Rolls-Royce, for example, that would have a similar operating model. You're given summary financial information. So we're given some sales, some operating profit figures, and capital employed figures for each of the 3 divisions: automotive, marine, and aviation, in each of those columns. And I'll explain those just in a moment. The situation we have is we've an additional 100 million of capital, new capital to invest in the business. Okay, it doesn't matter where we got it from. We've got to deploy this capital. And the board has requested you as CEO for a proposal recommending what the optimum capital allocation should be. So how are you going to take this capital and allocate it across the divisions? And this is, a classic situation faced by any business owner, by any entrepreneur or manager or CEO. It's how do you optimize your capital allocation in your business? And it can be on a very large scale, or it can be a very small scale. It could be about doing the next project or investing in a new product, or it might even be in terms of hiring a new team. Thinking of it in terms of you as an allocator of capital, of the resources of the business, is a really helpful way to ensure that you create value in your business. So what financial criteria would we use to determine that optimum capital allocation? So what I'm showing you here is a divisional analysis, okay, in this scenario. So we've included our sales figures at the top here for each of the divisions. That's fairly self-explanatory. The operating profit, what do we mean by that? Well, it's profit before we pay anything, any taxes, before we pay interest expense. Really what it shows is, on a like-for-like basis, how much profit, how much money does each division make for every euro of sales, okay? And what we can do actually is translate that into a margin, what we call the operating profit margin. So all I need to do is take my 60 million for automotive, the operating profit, divided by the 330 million in sales, and I'm going to get a figure of 18.2%. If I do the same for marine, I'm going to get a figure of 20%. And if I do the same for aviation, I'm going to get a figure of 21.4%. So in percentage terms, that's how much money in operating profit we make for every euro of sales. And if we were to rank the divisions on that basis, well, aviation comes out on top. It's the best operating profit margin, followed by marine, number 2, followed by automotive, lagging in behind in 3. And a lot of businesses won't go any further than this. They look at the turnover, the sales, they look at the operating profits. They might compute margins and say, what's the most profitable business here? Well, they're the ones that should get the money. That's actually not far enough. Okay, we need to go to what we call the kind of the superhero, the Clark Kent of financial ratios, and that is what we call our return on capital employed. Our return on capital employed simply takes the capital that's employed in the business, this figure here, 300, 500, and 120 respectively across the 3 divisions. By that we mean the net investment in the business. Think of the net assets of the business, so the production assets, the investment in working capital, etc. It's what the providers of capital, the shareholders and long-term lenders, have given the business to deploy. And we need to look how much return we make in that capital. So rather than looking at margins on sales like we did here with operating profit margin, now we look at how much operating profit we generate for every euro of capital invested in the business. So what I'm going to do for automotive is I'm going to divide the 60 million by the 300 million. It's going to tell me I make a return on capital employed of 20%. I'm going to do the same for marine. I'm going to divide the 40 by the 500 million. Capital employed is going to give me a figure of 8%. And if I do the same for aviation, I'm going to divide the 30 by the 120. It's going to give me a figure of 25%. And now when we do the ranking, we get a slightly different picture. Aviation still comes out on top. It's number 1, but automotive now jumps to 2nd, and marine actually comes a distant 3rd. Okay, so when we look at the return on capital employed, we see a very different picture. In fact, when we look at the marine business, and return on capital employed of below 10% typically doesn't represent a good use of capital. People will find a better home for their money, more attractive returns elsewhere. It's arguable whether we should be even in the marine business. So we definitely wouldn't allocate any of our 100 million capital there. We'd have to choose between automotive and aviation. Now, on the face of it, aviation looks best, 25% versus 20% in automotive. But we need to go a little bit further than this. That's beyond the scope of the day, but on the course, one of the things you learn about is what we call a concept of cost of capital. And cost of capital are simply how much reward, how much return we need to pay the providers of our capital for them to be satisfied with the risk they're taking in investing in the business. And that unlocks a really key measure for a business. A business will create value if it can earn more money from the capital it takes in from investors than they need as a return. So when our return on capital, our return on capital employed measure here, is better than the cost of that capital, what we have to pay the providers of capital, well, then that's a value creating business. And the reverse of that is you will destroy value. So what insights can we take from the capital allocation scenario? Well, I guess headline sales numbers always grab attention. We've all been in sales meetings where people talk about big deals and big sales. But what often gets missed is whether or not we're actually making money. And sales tell you nothing about profitability. So it's very important to drill down and analyze to see, are we actually getting good profits for the sales we're making? But when you go a step further, the challenge is that just because a business is actually profitable doesn't mean it earns a good return on capital. And as we've just witnessed, if the return on capital is higher than the cost of capital and what we have to pay the providers of our funds, then that business is creating value. It's going to attract investment. It's going to prosper. It's going to grow. If the reverse is true, well, then you've got a low return on capital that's lower than the cost of capital. That's a business that's destroying value. Now, what you'll learn in the course is that this isn't a universal measure. We wouldn't use it for high growth, cash rich businesses because it can actually distort the information that you see, but it's very suitable for asset and capital intensive businesses. And we'll look at a lot of case studies and scenarios for how to actually interpret this information. But I suppose what I was hoping, and hopefully I have achieved in these two scenarios, is just to give you a sense on how in the program, by kind of immersing you in these situations and actually having to make decisions yourself on the program, you're going to learn how to apply them and how to improve your decision-making skills as a manager. So at this point, I'm going to hand over to Linda, who's going to tell you a little bit about study and assessment and enrolment. Linda?
Good afternoon, everyone. So I'm just going to take a few minutes to go through how the diploma itself will be delivered. So the course is going to be taught over a 6-month period and delivered through a blend of distance learning, self-study and virtual classrooms. So how this will work is each module you will be asked to prepare before you come into your virtual classroom sessions. So this could include activities like assigned reading or engaging with the pre-recorded tutorial videos that will really introduce you to the concepts of each particular module. And then you'll come along into your virtual classrooms, and these sessions themselves will be facilitated by Brian. And within these kind of live sessions, they're very interactive, and you will focus on the core concepts of that particular module. And do things like interactive case study exercises, and there'll be team breakout rooms. So within those 3-hour sessions, you really kind of put all of your learnings together. So the live sessions themselves will take place once a month. And each Monday, each module will be held on a Monday evening, and they'll run from 6 to 9 p.m. So the course itself, it is fully online. It's a fully online course. You won't be expected to appear in CA House and for any actual classroom courses. So how we're going to support you on this is through our learning management platform. And we use Moodle for this. And Moodle will host all the course materials and activities, such as your study guides, pre-recorded videos, case study exercises, course notes and slides, plus also the links then to your live sessions. There'll also be information there how to contact with your lecturer, how to contact your course coordinator, and the timetable itself. And then the platform will also allow you to network and share your questions and experiences with other participants who may book on the course. So that's really how the course is going to be delivered. And next, I'm going to move on to how it's going to be assessed. So the diploma is assessed through a combination of online multiple choice questions, written home assignments, and these are all released and submitted again through Moodle. And as you'll see on the slide, the breakdown of marks and the way it's assessed is there. So we've got 15% is broken over 3 online multiple choice assignments, and they will be released on Moodle after modules 1, 3, and 4. And then we have 35% for an interim written assignment, which will be submitted after module 2, and 50% for the final assignment, which will be submitted after module 6. And you must achieve 50% in the final written assignment to be eligible for the award. The pass mark itself is set at 50%, and the distinction is set at 70%. And for those then who do all of the elements of the course and pass the course, you will receive an award, Diploma in Finance for Managers, and that's awarded by Chartered Accountants Ireland Executive Education. So that's the kind of the assessment and delivery piece. So now we're going to move on to the timetable itself. So there should be dates on the screen there. And as you'll see, there are 6 modules, and each of the dates on that particular screen are the dates that the virtual classrooms will take place. So that's just so you know, that that's when they're going to happen. You don't need to memorize them or write them down. One of my colleagues is going to put the brochure in the chat box, and the dates are on the brochure there, so you'll have all of that information. Because that's the time you'll need to physically be sitting at your machine and log on, and then the rest of the time is pretty much self-study. And then we'll go on to the very last slide then, which is just information about the cost of the particular course. And again, if there's any questions on that, I'm happy to answer those. So that's kind of my part really completed. It's just a whistle-stop tour on how the course is going to be delivered. Thank you for your time. I know we're going to move on to a question and answer session now, so I'd be happy then to answer any questions that you have, whether it's on delivery or costs or payments or any kind of question that you have, I'd be happy to answer them.
Thanks very much, Linda. My name's Laura. I'm part of the comms team, and I've been keeping an eye on the questions as they've been coming in. If you have any questions at all that you want to put to our panel, by all means put them into the chat. We're also joined in this section not only by Joe, Brian and Linda, who've just been speaking to you, but by Sinéad Fox-Hamilton, who's one of our relationship managers here at Chartered Accountants Ireland. So the first question that I've got is, what level of maths proficiency is needed? I haven't done maths since my GCSEs. That's one for Brian, I think.
Thanks, Laura. Yeah, happy to take that. It's a really good question. And I suppose we thought quite a bit about this actually in designing the program, because we were recognizing that we were going out to, people who, as the questioner said, maybe a long time since they did any finance or even any difficult sums, right? So I think the best way to reply to that actually is the examples that we've just shown you, okay? We were doing some financial analysis there, actually very basic financial analysis, but really important stuff, okay? And as you saw, the sums are really, we need a calculator, so you need to be able to use a calculator, but you don't need to be numerate in your head. You don't need to be even remember your tables. Calculator's fine, and we're not really going to be going much more complex than basic addition, subtraction, division, and multiplication. Most of what we can do is done that way. There's financial formula we will use, and we'll show you how to use those. But again, they're relatively simple. So I would say the emphasis on this program is not on kind of difficult financial concepts. It's about understanding the basics and knowing how to apply those. So, if you're not strong on maths or strong on numbers, I would say that shouldn't be a major barrier for you to doing this program.
Thanks very much, Brian. I have another question here, which I think is probably going to be one for Sinead. Does my employer need to be involved when I apply for this program?
Sure, thanks, Laura. So what I would say is we welcome both independent self-funding students and students, of course, sponsored by employers to our programs. I would work a lot with employers, and what I'm seeing in the market, given I suppose the rapid pace of change, is that more and more employers are actively investing, I suppose, in staff learning, and they are open to sponsoring in full or in part even staff professional development. But equally, we have many students who self-fund their journeys. They just wish to upskill themselves. And I suppose another thing I'd say is, if you're thinking of approaching maybe an employer for support, it's a good time to do that, because we're coming up to that sort of midpoint in the year. Half-year performance reviews are popular in many organizations at this time, and maybe that's something you can weave into the conversation, because obviously training and development comes up as a natural discussion point. So many staff use that opportunity to ask for employer sponsorship for courses, for programs, and this might be timely. And one other thing I'll maybe just say is, we also work with employers to tailor actually in-house training solutions as well. And that's in addition, I suppose, to the brochure and what you'll see in terms of the qualification like this. So if it's relevant to create something that works for your organization, if you have a certain critical mass of staff, it can perhaps be more cost effective or cost competitive. So I just wanted to flag, it should be relevant if there's a group of staff that you think this diploma, another diploma, or some of our other training is relevant, and bear in mind that we can tailor learning solutions for you as an employer as well. So hopefully that answers the question.
That's a great point. Thanks, Sinead. And you'll be able to find all the information that Sinead was discussing there on our website. I have another question here, which I think is probably more related to the syllabus again. Is the material more oriented to a large corporate environment, or would it be suitable for someone working in a family business? I think that's probably one for Brian.
Yeah, thanks, Laura. Again, that's an excellent question. So the thing is, again, when we looked at the program design, we realized that we'd have people from all walks of life, okay? So you may have lots of people kind of in large kind of corporate services business or multinationals, but equally there may be small business owners, entrepreneurs, and small, local businesses that are looking to benefit from the learnings on this program. And I would say they're universal. So no, it's not that we, of course, we will use a variety of different kind of case studies and scenarios. Some of the kind of more, headline real life stuff we'll use will be kind of large corporate situations that you'll probably all recognize, because there's a lot of learnings from those. But I think most importantly is that the skills and the understanding and the insights that you'll take from the course are applicable everywhere. And, I referenced back in the first scenario, we were looking at the cost benefit analysis. That doesn't have to be a big decision. It can be a very small decision. It could be a decision about an advertising campaign. It can be a decision about a product launch. It can be a decision about, whether to renew the lease on your office premises. Okay, so it's about, the principles can be applied universally. So I would say we're very happy to welcome people from large and small, international and local.
That's great. Thanks very much, Brian. I've had one last question just come in on the chat. It's should I need to take study leave while I'm taking this program? I'm worried about taking on too much. I think that's probably one for you there, Linda.
Sure, I can answer that. Thanks, William. The answer is no. People don't really normally need to take study leave when they're completing our programs. But the course itself is designed to work around participants' home and work commitments. And the way it's designed is in one module per month. We would expect, each module would require about 10 to 12 hours to complete, and that would include the virtual sessions that you'll attend with Brian. And we would also expect the written assignments themselves to take about 15 hours to complete each, and you do have 4-week window to complete that assignment. So overall, the course kind of works between 100 to 120 hours over actually a 7-month period, because the second assignment is released after module 6, so you'll have March, let's say, extra on top of that to complete that. So it works out about 4 hours a week. So we find it's quite manageable for people. So we don't normally say that people have not normally kind of requested official study leave to do this particular program.
Thanks very much, Linda. I don't see any more questions coming through on the chat there, but obviously if any of you do have any queries, feel free to reach out to the team. But I think that probably wraps up the Q&A section, unless anyone has anything to add. And if not, I'll hand over to Joe.
Thank you very much, Laura, and thank you everyone for joining us. We will send you on a link so you can download the brochure. And if you, of course, you have any more questions, come back to any of us here. You'll catch up with us on if you go to charteredaccountants.ie, you'll get all our contact details there, and delighted to have a further chat and take this into more detail if you did. Thank you, Brian, Sinead, Linda and Laura, and thank you all for joining us today. Goodbye.